Apple and Amazon are down after hours with their earnings reports, not due to an earnings miss, but due to guidance that was a little bit lackluster of where they're going forward from here due to the tariffs and the trade policies that are still uncertain. In today's video, what I want to do is I want to go over some news and details of those earnings and kind of see, for those that are not reading into this, why these companies pull back. I think I have a lot of beginners on here, or people that are still learning, and people just trade and invest off of vibes these days. Okay, let's be real. So I want to get you, if you're a beginner on here, learning and trying to educate yourself why these things are happening, you have a rational understanding of that an earnings report could be great, but their guidance is also important and why they may pull back. So for those that trade on earnings before, hey, just know it can go either way. All right. So without further ado, my name is Dr. B. You can read more about me down below my website, brianmcelderry.com, about my journey of full-time entrepreneurship from pharmacy and coming from a holistic perspective as a life and a business coach for thought leaders and entrepreneurs as well. If you want to join our Discord, Leverage University is the link down below as well on the site. That is our community. That's where we have our trading floor, our ideas, entrepreneurial advice, thought leaders, book clubs, town halls, all kind of good stuff that you can hang out with professionals and thought leaders and entrepreneurial minded people. All right. So if that is you, if you want to get off of these YouTube streets and get into a community, or you're already in one and you want to join multiple, that's cool too. Should be a little discount code there for you when you click on the link as well. All right. Thank y'all so much for the support. If there's anything that I can do for you as far as improvement of these videos or any videos that you would like to see, let me know as well. All right. So without further ado, all those good things, let's jump into today's updates and get us ready for a start of a new month. And also next week, what might be coming. Okay. You see the thumbnail says this sell signal. So there may be some concerns about what's going to happen. All right. So let's jump into it. Amazon issues light guidance notating tariffs and trade policies as factors. Okay, Amazon reported better than expected earnings, as expected, revenue, but it gave light guidance for the current period. And I think this is a perfect example of how a company could be doing just fine. But imagine if you were a CEO of a company, which may some of you are, right? And you're trying to tell your shareholders or tell your team or tell your friends and family, hey, what's going on with Amazon? Where are we going? Should I invest now? And you're like, I don't know yet. Keep investing with us, but I can't tell you right now because I don't know how this is going to affect our business. That's essentially what's happening with the after hours. Now, I do believe, I haven't checked it. We'll check it together. If it's recovering slightly because there was the earnings call, I did not listen to the Amazon earnings call and Apple earnings call prior to this video, but I'll check it out afterwards. So I take this with a grain of salt about what they actually said on the earnings call. Okay. The company anticipates operating income 13 billion and 17.5 billion, while analysts projected 17.8 billion. Amazon called out tariffs and trade policies, just as the headline said. Okay. So you can look through all this here. You can type in this Amazon issues light guidance, so on and so forth, right? The advertising 13.92. 13.74, beat Amazon Web Services, AWS, 29.3, 29.42. So yeah, a slight there. AWS and then revenue beat, yeah, and then beat. Okay. So decent earnings, right? Better than expected. Okay. Let's go to Apple. Apple shares fall as Cook says, let me get rid of this. Cook says very difficult to predict the tariff costs beyond June, right? Apple reported fiscal earnings Thursday that beat Wall Street's expectations. As we said, the company expects tariffs to add $900 million to its costs for the current quarter, assuming no other major changes occur. That is massive, right? They're already flying in iPhones from China. They're already China's already flying in, going back and forth. So it's very interesting about how this Q2, and if we look at this, where's Trump's tweet? Okay, Trump tweet talking about the Biden market. He said, this is Biden's stock market. And also make sure that you prepare for the second quarter if we have another GDP after blaming him for Q1 drop. So is he predicting something on the horizon saying that, hey, this isn't my stock market, but when it was booming, when he got elected, now it's his stock market. I'm not here to, have any political say. I don't like to have any sways on these public platforms, but I'm just saying, like, Come on, bro. What are we doing? Right. So it may be, it may not. I don't care what people's opinions are, but is this a forecast? Now, that's out of a man's mouth, but these are numbers. This is real when you're saying that if these tariffs start to come in, right, and start to inflict, which they already are, as some people have known on the shelves, right, the cost adjustments that they may have to make, go ahead and make cost adjustments now for many of these businesses, that's going to affect the future forecast, especially for a Q2 earnings, which is coming at the end of the summer. So what are we doing? Okay. So 900 million, let's not belabor the point here. Very difficult to predict. That makes sense. I don't know. Right? Because I'm not sure what will happen with tariffs. That is a blanket statement. Makes sense. Right? So Cook told CNBC that Apple is already sourcing about half of the iPhones from the US from India and most of its other products from US from Vietnam, where tariffs are lower than they are from China. So that's somewhat of a positive, is that most people think that it's all from China, that that manufacturing and products are all from that one country where there's a tariff war and there may be higher tariffs with China and the US. But we have Vietnam and India, which they're closer to getting to those deals. Okay. So those are the main two earnings reports. You can read them on your own there and get the fundamental news and data. Now, let's look at the docket here for our economic data reports, which are also on the docket and on the calendar this week. So many of you know that we've had about 6 to 8 straight green days. Don't quote me on that. I'll look on the chart here in a second. But 6 to 8 green days consistently on this nice recovery back to the upside. Okay. So with that being said, we have recovered roughly about 15 to 17% from the S&P lows. Okay. That is a significant amount of recovery from our drop, right? You get 16, 17% on your money if you bottom ticked, right, and caught the deep bottom of the buy and rode it back up, right? That is a whole year's worth of a return naturally. So yes, many people may want it back to all-time highs, and we will head there eventually. But in today's video, you see the thumbnail, the sell signal. I want to give a little bit of a warning of where we may be headed in the short term, then to go back higher. All right. So we've hit our critical junction. We've got most of our earnings out of the way. We still have NVIDIA coming up at the end of the month and some key earnings coming up next week. Tomorrow, very key here on the non-farm payrolls. This is going to be massive at 8:30 Eastern Standard Time, talking about our our employment data in general, how that is doing. And I think many people understand right now that there's a lot of layoffs. The filing for unemployment could be high in Q1. This may, be that wrecking ball that comes in and gives a little bit more uncertainty into the market, and some profit taking comes in to start off a new month. Okay. We had a great recovery from August. I'll show you on the charts. Think about yourself. If you bought the dip, which many of us were talking about, buy the dip, buy the dip, buy the dip. Don't be scared, buy the dip. But now that dip has been bought, and we've reached a pinnacle right here, which is very key, where if you bought the dip in April, you are up significantly on a lot of stocks with just equity. And also potentially, if you bought the dip for long dated call options, you were up. So we're going into a new month. We're going into some uncertain times. We're going into some uncertain data. Earnings have passed. We may have a little bit of profit taking, right? So there's the fundamentals out of the way. Let's jump into my favorite place, which are the charts. Now, this is the thumbnail you may have seen. So let's talk about this kind of quote unquote sell signal. So we have this death cross, and you can go listen to a YouTube video, kind of scan through it. It should say death cross, thumbnail on it. It looks very similar to this thumbnail. Okay. This is what you've been hearing traders or investors kind of looking at, is this quote unquote death cross, the 50 moving average on a daily crossing the 200-day moving average, which signals more bearish pressure. So as we broke down underneath all those moving averages, you can see that it's turning it into a resistance, and now is potentially turning it into another resistance at those previous lows, just slightly under 570 on the S&P SPY, okay, ETF. So let's look back a little bit in history and see in 2022 what that cross looked like and what we did from it. Okay. So it's obviously not going to be the same, but here is our drop, our first drop, right? In 2022, we recovered. This time we did get above that 200, but it did fall back and begin turning that 200-day moving average into a little resistance. So I would look at it more on the side of roughly into the end of February as a very similar look, which is right here. That is about a 15% drop. Now, we've had a lot more, obviously, than that. We reached bear market territory past 20% on this current drop, but this is in further correction territory past that 10%. Okay. So we recovered, a little bit sooner in 2022. We recovered from that capitulation, right? That scarcity drop with this big, massive daily candle here. And we recovered. And then we sold off a little bit more. Okay. So I want you to see the similarities slightly with this lower high forming as we have roughly this death cross. Now, if you want to look at it more so from this stance, that's really when we kind of crossed, which was kind of right in this area on a daily. Okay. And that's where that resistance really started stepping in. We started coming down. Okay. So we do have some key data next week, right? FOMC, if you're not too familiar with that, I do believe. Okay, let me see. Yeah, FOMC meeting next week. So if you're up on your position and you're coming into Fed Powell, who is set to either cut rates, pause them again, hike them, which we don't expect, but pause or cut, and you don't know, you're probably going to take some profits. Get my drift? And this is more so for anyone that's learning, that wants to understand why, because you come to these videos to get updates and ideas. What do I take? What should I do? What should I buy? But I feel like when I watch videos on these platforms, I want to rationale by why someone is, taking profits. Why is it going to sell? Is it just fear mongering? No. Selling and drastically panic selling is different than a profit taking. Look, it can look similar, right? But I'm not expecting, as we're, fairly bullish on this, push up, right? Yes. You see there? So we've got this cross, right? There's that first move and we're coming back above it. So primarily I'm looking for a slight pullback, okay, tomorrow. So what are the levels that we're looking to pull back into? Let's go over them. So I want you to pay attention to these moving averages here on a daily time frame. And I'm going to keep this right there. Okay. So there's some gaps to fill down below, right? Gaps are created in stocks when there is typically news overnight or an earnings report overnight, and positive news. We wake up in the morning, it's gapped up. Okay. So these gaps need to be filled. We don't know when, but typically they get filled within sometimes a day, sometimes within a week. If they're a larger gap, they're further away, sometimes a couple of months, right? But this one's pretty close, and it began filling throughout the day because we gapped up today into that 562 level, pushed up into 564, almost got to that 565 level, right? And then we sold off and started filling this gap back to the downside. Now we broke back under 560, very important psych level, and we're sitting right here at that 556 to 557 previous high, okay? So what I'm going to do is I'm going to mark this level right here, which is 556. I'm going to mark out the previous highs, which is roughly about 555, okay? Right there. So this green zone right here is a first level that we could, shortly bounce off of, okay? It could be one of these, come down here, and then go right back up, okay? It could not be a big pullback, okay? So that is the first level of interest for buyers to try to hold that level up. So if you see it pushing into 555, 556 tomorrow, you want to watch that level to see if it breaks underneath or it holds. Okay, I'm going to go into shorter time frames in a second, but I want you to look at what's possible. Push down into there. And then somehow we rebound off of there. Now it's ugly. Okay, that is not how it's supposed to look, but you get the gist. Okay, bounce into there, and we could retest and go higher, right? To try to get to that 200-day moving average there on a daily, that orange line. So that's a possibility. Okay, so I want to be mindful of that. that when people say selling, or man, I see a sell signal candle here, which is roughly a hammer candle, not a hammer candle, excuse me, an inverted hammer candle, or a shooter candle is what it's called. This is typically a sell signal type of candle. Okay. It pushed up. This used to be a solid green candle and sold all the way back down to turn into a red candle. If you want to learn about candle structure, go listen to my stock charting video. All right. So that's SPY. That's what this whole video is stemmed from. When you see the thumbnail, this is somewhat of a sell signal underneath the 200-day, pushed up into it, still underneath, failing back underneath. Okay. And if we get underneath, so here is more selling that is to come. If we push underneath that level, okay, and we're down into underneath 555, I want you to watch for a retest. Let me go into a shorter time frame because these are ugly. Okay, let me go into, you can see a little bit clearer. You see how it's holding up already after hours? So I clicked into my 2-hour time frame just to give you a better view. And you see how it's already kind of holding up that 555. Okay, so I do not want to short or puts into that just because you saw a lot of selling coming into the end of the day. Okay, so patience tomorrow. If you are a Friday type of trader and you want to catch something, 2 signs. If we break underneath it, okay, underneath 555, and then push back up into 555 and it just can't get back above it, then yes, more selling pressure can come down into 550. Okay. That'll be the next level of support, 550, which we held pretty well in that big volume candle came off on Wednesday, right here. You see that? So 550 will be that next level of interest, right? So here is the dark black area is when the market's open. The light gray area is when the market is closed, okay? So in the morning, this dark black area will open up and we will see what we do. So if I see it above this green line, be a little bit patient, right? I do not want to essentially think calls right away because this was a lot of selling pressure coming into the close. That tells me something. Remember that sell signal that I had. So sellers or profit takers are very present up here in resistance. So I don't want to really take calls necessarily if I just back up into that area. I'd probably personally rather wait, right, for it to pop back up, see if I can find a lower high, and then maybe scalp it back down ideally. Okay, so that's your prerogative. For my experience, folks out there, how you like to trade. I'm just saying that on a bigger time frame, right, we're sitting right up in this resistance, and the risk to reward right now, instead of, let's go calls. Okay, when we were down here, that's your risk to reward, right? Very little risk. We've sold off a lot and calls back up. Okay, that's your risk to reward playbook. Here is a risk to reward here for the potential for it to go higher. Still not bad if you keep it underneath that 505 level. Okay. So risk to reward still to the upside here. But now we have reached a previous low at 566, and I'm just going to put it into 570. Okay. And we're at this moving average here on a weekly time frame, that 50-day weekly. Okay. So now risk to reward has flipped slightly, right? To look more like that. Because I know where sellers are based off of that drop from the tariff news and based off those previous lows where its former support turned into resistance, right? So I don't necessarily want to scalp calls back up if it's in resistance now. Okay. Now I'm talking to traders, people that make money intraday, daily, weekly, things like that. If you're a long-term investor, just expect a pullback by the dip, right? Like, I think that gets twisted with this stock market stuff is, oh man, it's going up. Why would you short that? I'm talking about trading, okay? Not speaking to anyone in particular. I'm talking about trading, not necessarily long-term investing, which is fairly easy. Buy the correction dip, buy the bear market dip, keep buying the dip, hold it for 2 to 5 to 10 to 20 plus years based on your strategy, and you're good. All right. Not very difficult. Okay. So the charts help you as a long-term investor and also as a trader. So if I get underneath that 555, back underneath that previous low, you see the drop in the pullback that was evident there, that we could get a little bit more drastic. Okay, could get a little bit more drastic, right? If that trend kind of breaks, and if I draw a trend line, kind of that I have right here, that sends me back down maybe to 550, right? Now I've got to prepare for all types of things in a more of a Trump market, uncertain market, as volatile moves are happening. What if we do something crazy? Like, I got to be prepared for, potentially back down to 547, and then that 547 and 545, right? Got to be prepared for something crazy like that if possible, which, with earnings beats, good Meta earnings, good Microsoft earnings, I don't suspect it, but you never know. Okay. So I'll be watching in the morning where it's sitting and what it's doing and what type of risk to reward trade we may have on a Friday for my Leverage University members. All right. So there's my full SPY analysis. All right. So QQQ, I'm going to go over the levels really quick. I want you to watch out for 577. Underneath that 580 psych level. All right. I'm going to turn that into somewhat of a resistance right there. All right. And I like to put my pivot points in like a yellow dotted line. So I want you to watch out for that 580. If we start turning that, 480, if we start turning that 480 into a resistance, right, then that could be our new resistance. Broke underneath, right? Turn that into a resistance, form a lower high, and then we start coming down somewhat like that. All right. So I want to mark these previous highs as potential support areas. So I'm going to be watching that 475, right, for a potential bounce. If we're already down there, I want to be mindful that that is a little bit of a support, as you can see towards the end of the day and after hours right there. And then we broke above it. So that turns into a little bit of support. It's not a big macro support in my opinion, right? More of the macro support is obviously down here into this 465 area. Now that would be a major sell-off on a Friday if we do something like that and QQQ drops $10, which we've seen. Okay. So not unexpected that these volatile moves will move from 462 all the way to 480 pretty much. So you have a $12 move on Qs. So I'm not shocked if we pull all the way back down to there, if we do have some selling pressure and it gets a little bit heavy up here and we start breaking through some levels. Okay. So I'm going to mark some of these previous highs, 473 on QQQ. 473 and 475.50. So that green zone, if I'm in it, I got to be expecting for buyers to maybe try to hold that up and rip it back to retest the highs to try to take it out. All right. Got to expect that right now until we get more of a volume candle that shows true like breakthrough selling pressure, right? Which we might not have until Monday or Tuesday before FOMC. So I don't expect, some type of big move like that to happen until maybe next week before FOMC on Wednesday. Okay. So expect a pullback Monday, Tuesday, or Wednesday, where I do believe we're going to get some massive selling pressure past that breakthrough line to retest some of these lows. Okay. Would not surprise me one bit. Okay. All right. As you can see, that area is very massive right here. Previous highs, previous lows, anywhere in that 465 area could be another bounce opportunity as well. All right. It's trying to go higher right now. We are still in fear. And every pullback dip is getting bought. Every pullback dip is getting bought until we massively break through that structure, close underneath, in my opinion, 4.6. We thought that this was going to be selling right here. So I would say break and close underneath that 4.65 area, 4.64 area. Okay. So I need a candle underneath there to even confirm that. All right. But my bias a little bit is going to be more on the put side or the selling side tomorrow. All right. IWM. All right. Getting a little bit heavy up here. All right. A little bit more selling pressure right there. And then pretty heavy right here. I think IWM has some value potentially if it starts getting up in this wedge right? And I start seeing it, one more time, that could be some value below 197. And we could get that breakthrough down to that 192 level. So about a $3 to $4 move, which is really good on IWM. So I'd highly watch that. But it's got to break that trend. Okay. Got to break that trend. It's in a nice, resistance area here. As you can see, it's kind of grinding up into potentially a bear flag to pull back and maybe try to fill those gaps at some point. Okay. So IWM tight range, got to have a little bit more precise entries on IWM to really get the most value out of it. It's a really good small cap, obviously small caps, but really good index for people that personally don't want a lot of volatility, don't want these big, massive moves. If you're a newbie, if you want to know, IWM still brings a lot of value, but it's not moving $8, $10 if you're on the wrong side of the trade, right? Right now, IWM is moving roughly around $4 to $6, right? Maybe 5, 6 on a good day. Okay. All right, let's jump into the main attraction here. Let's just go into Apple and Amazon. There's your Apple chart. It's still above 200, so I'll be watching that area. There's going to be a gap here, so it is going to try to retest roughly 208 to 210. So remember, former support, if we break through it, now it becomes resistance. So I'll be watching the strength push back up into that 208 to 209 area, right, for a recovery. Okay, because remember, their earnings were not bad. So this is technically a dip buy, and we could rip right back up into that area and either fill the whole gap back up, which we've seen, or it gets a little stuck and then we come down. Okay, so I want to watch that 208 to 209 area that could act as a little pivot point resistance right now that I want to have on watch. Okay, so I'll just watch that yellow caution area as a little bit of resistance that we could push back up into. Now, if we reclaim it and get back up, then we're going back to, and we made a full recovery move all the way back up. Okay, so watch that area first to see if we break through, don't get stuck up there, and then reject it right back down. Okay, now what area below could we potentially just sell through? What if it doesn't recover, Brian? Well, we're underneath, as you can see, that low. We've broken below that little yellow line, which is that support and that support. So instead of pushing up through this gap, we are now breaking back underneath and we're at 205. Okay. So I want to watch 200 as maybe it might want to come in to this 200 a little bit closer, 200 to 201. And I want to watch how it reacts there. Y'all know 200 is a very, very big level. If we break underneath 200, I think that's where the free fall starts to happen. And it's a full blown, like full gap fill all the way back down. Apple goes from 205 back down to 195. Okay. So I want to watch that on Apple tomorrow, taking it step by step. Right. And just looking at those levels and how they react to the levels and trade off of those particular levels. 200 is a massive level of interest, psych level, big level. Right. I do believe there's going to be some buyers there to try to hold that up. Right. So if we can get a push up into that, then that's where I could see it headed back down to. So 209 rejection potentially. That's what I'll be looking for. 208, 209. If we hold underneath that area, we'll see. Got to be a little bit more cautious with Apple. As you can see that it was a little bit more effective with tariffs and it may have a little bit more selling pressure. Okay. I'll give an example of what that looks like with Eli Lilly in a second after Amazon. Okay. We see Amazon kind of already forming this bearish flag here, push down, bear flag to come lower. Okay. So let's look at some gaps on Amazon that are still present below. Okay. So it's down at 184. It's roughly around right here. Okay. Which is right into a support. Okay. Right there at that support range, we reclaim 185. There's going to be a gap at open. So when you open up, there's going to be one of these at the top. Okay. Typically that likes to get somewhat filled if it can. Okay. So if it gets back above and pushes back up here, previous low could be turning into a resistance. I'd mark that area. 188 to 187 would be ideal for kind of my rejection zone. Okay. That would form our lower high to reject right at those previous day supports, which are right here. Okay. So if I get a push back up into that area, 188, 189, if I see some resistance up there, right, that would be an ideal, potential short that I would look for to come back lower. Just an idea, a game plan. Now, if we're into this support and I start seeing it hold at 180, right, hold at 178, hold at 180, right, you see we're right in support. If we see that in the morning, right, then I'll maybe look for that gap fill to get back up and look for calls. Okay. But gap downs, I'll have to do a whole video on this, but gap downs are a little bit different than gap ups, right? People are a little bit quicker to take their profits, right, with gap ups, meaning, hey, we gapped up and it typically comes down, right? But with gap downs, you can just continue because people don't like to see red and they start panic selling and then, taking more profits and, oh man, I need to get out. I was in a call position in Amazon. I thought they were going to beat and they beat and they're going down, right? So those orders get filled, right, coming down. So it may continue a little bit further, right? So I want to give the gap downs a little bit more room, right, for considering trading against the trend back up. Okay. So there's a little 2 cents. All right. Yeah, I want to give Amazon potentially back down to this 178. Okay. That's a high level of interest there. 178. And then where are those gaps? 175, 176 to 178. I want to watch that right on that trend line. It would be that area that I'll be interested in on just letting it fall to, or if I can catch a put trade down to there, that would probably be the level. I think it's, that would get pretty drastic if it breaks below that 185 and holds. Okay. All right. There's Amazon, Apple, 2 trade ideas. Watch Apple underneath 210, that 208, 209 area. Watch that area to see how it reacts. If we break above 210, we're headed back to that 212, 214, 215. If we hold underneath that 208, 209 and it rejects and comes back down, right, then there you go. You're coming back down to that 205, then 201, then 200 area. Okay. Let's look at Eli Lilly really quick. Caught an awesome trade on Eli Lilly. This was a strategic lotto. I probably need to do this a whole separate video. But we caught this trade from here all the way down prior to earnings. How did you know it was going to drop? I'll give you my analysis, my strategy on my risk to reward to enter this prior to earnings, a put trade prior to earnings and getting 1,400% return on those contracts. All right. But before I go over that, let me jump into some others that are concerns or just, maybe to pay attention to. All right. Palantir, also top end resistance, rejected 120. Right. I know people are Palantir, but it may be due for a healthy pullback, which it needs to retest that 100 to 101 area again. So there is a potential for Palantir to give back potentially $20 of a move to maybe fill that gap back down. Now it does have to break some levels, some very key levels of support to get back through that. So I'll be watching 110, right? That area right there. I need to watch that because that could be a bounce area for Palantir as there are a lot of buyers sitting right there, volume coming off of there and volume coming off of there at 110 to 112 area. Okay. So Palantir is at 114 right now, pushing down into 110. All right. You see it there, already kind of heading towards that area. Right now, if it gets drastic, this trend is kind of starting to break a little bit, right? As we've reached our top end of resistance. So what if Palantir, it's broken back below previous day highs? What if it bounces up and forms another lower high and breaks back below that 117? Well, what if it gets pretty drastic there? All right. Now we're coming into the lower ends of the range. Now I'm just looking at psych levels, right? Psych levels, I typically go 5s, 10s, 15s, 20s, round even numbers. Okay. So 105, 106, and then there's that 100 area, which is that previous high that we broke above, that 100 to 101. All right. So it would look something like that. right? But it's got to get through these areas first. But that would be ideal of a pullback. Okay. So you're just looking for those areas to either short into if you have the opportunity, or their bounce areas. As Palantir does have earnings coming up and is a strong stock, bounce into there, go up. So the deeper, the better. The deeper the pullback, the better, in my opinion. Okay. Especially after a straight up move, grinding higher. Typically, you have a staircase up, elevator down. Okay. All right. Palantir, there it is. Tesla, not going to go over the full, thing here. I talked about it yesterday in my video. Breakup, consolidating. It's kind of consolidating in this channel. 270 to 290. Just look at those two levels in this channel right here, locked in until probably FOMC. And ideally, Tesla, which makes no sense, but it is what it is, wants to do something like that if it can get above that 292 area. Okay. Looks like a little consolidation bull flag to me. So that is what I'm looking at on Tesla. It hasn't really retested that 260 level. So if it does break a little bit deeper into the channel outside of this, I'd be looking for something like that. If you do trade Tesla and you're looking for a really good risk to reward retest, see there, break, consolidate, bull flag, get above, and then take off. So that would be your retest level. Ideally for Tesla would be roughly around 260, but right now it's, holding above that 270. Okay. So that is what to expect. So if you're a newbie, beginner, and you're confused, or let's take a pause here, and you're confused, or you're just like, man, this is a lot of information. I do teach this inside of our Discord and our stock market boot camp that we have every month, which we'll be having one next week. If you want to go ahead and sign up for that, there's an early bird discount, early 100. It gets you some percentage off, $100 off. So if you're more than welcome to join there, it's a 3-day boot camp. You can look on my website, sign up for that. All right. So that just gets you started. There's intermediates that come in. Typically it's for beginners, intermediates, or people just lack understanding fully of how to read all this stuff. Some people want to get better at charting. Some people want to get better at strategies. Some people want to get better at entries, like whatever it is, and they want to know why, and they get a little bit of that one-on-one time. Okay. So all we're doing is trading off the levels. So if it's in resistance, close to resistance, I want to look at maybe some puts back down. If it's too close to support, I want to look at calls or how it reacts there. I'm not just jumping into calls if it hits this green line, because it could blast through. So I want the best risk to reward. All right. Let's look at a couple more and then we'll get up out of here. And I want to go over and shout out some of the community members as well. SMCI, let's look at some of the earnings that we have. Earnings. Anything tomorrow? We have Exxon, Chevron. Okay. I haven't even looked at next week's, but Reddit, didn't check on that. And Airbnb, I know, took a toll there. Riot, a little bit of a pullback after hours. RDT, Reddit, took off a little bit of selling off. So that just has to do with market structure and right up into resistance right here at 130. So rejecting 130. Psych level right there. Happened last time as well. Pushed up in the 140, sold off. So it looks like that's a pretty decent resistance area for Reddit. So just want to keep an eye on it. It needs to fill a gap down below. So watch for Reddit to maybe pull back a little bit deeper to fill that gap. And then, hold at 100. I think it looks great. This could be a nice little inverse head and shoulders on Reddit if it can hold and reclaim that level right there. All right. There's a neckline, which would be right around that 126. If it breaks above that, all right, that could be ready to take off to the upside. So this could be a little mini pullback. I think they had a earnings beat, I believe. Reddit stock after snap earnings. What's going on? Plunges, price target lowered. I'm not going to go too much into that. All right. So shout out some community members. Qualcomm, that's also another one that pulled back. This looks like a bear flag. Watch that 130 level. It does have a gap back to the upside. So I like that opportunity. Once it finds some support, could be some opportunity back to the upside once it finds a support level 130. There's some buyers there, 130 to 135. And then if it breaks through there, we do have that retest of the low at 125. Okay. So I'll be looking something like this, hold and reclaim and squeeze, or this is too weak and it breaks all the way through there, comes lower, and then we find some support to go higher. Okay. That's about it. That's about it. And let's shout out some community members and shout out some of the trades that we took inside of the channel. Okay. So here's the lotto trade. You can see there. I shared in our trade wins. Gave the full idea. Congrats to Dreama, Microsoft, Lily. She took that with us, 159%. She had a runner there, 68% that she took off. So there's mine. All right, had 4 contracts there, 180%, trim 3, right around 200% or so. And then runner, roughly close to 1,500% on your money. So you do the math, okay? You do the math. If you had $500 in there, what's 1,500% on 500? I'll let you do the math, okay? So there you go. Today we had NVIDIA puts, Microsoft puts, all green. We did have to stop out. I was transparent about that. I did have to stop out of Microsoft as I didn't really like how it was moving. It was consolidated a little bit too much. And then the movement happened pretty much right at close. So I'm loving this candle here on Microsoft on a daily, right? That kind of sell signal candle. If we can get a retest a little bit higher, like what it's doing here, and I find a lower high, right? I do like Microsoft selling off a little bit more deeper into the gap fill. Okay, so I'm looking at 420 as kind of the next level of support there for Microsoft to try to head back into, and then maybe try to, if we get drastic, then, you know, we start giving that more of the move. But I do expect Microsoft to kind of stay up above this 419, 420 for a little bit until maybe next week, and we have, you know, the FOMC meeting. So I signaled Microsoft right around, or I took it. I don't like to say signal, but I told the group that I was entering Microsoft pretty much on this candle. I really wanted to top ticket once I saw that 15-minute candle kind of come in right there, close. I was trying to enter right here, and that next candle just opened up so fast that I kind of missed my entry. Got into puts. It started retracing on me a little bit. It was a Thursday. I was trying to manage Lily and whatnot, and I was just like, I'm cutting it. I don't want to add more to this until I have more confirmation. I really wanted that first drop right there, which was 436 down to 4, pretty much 26. So a $10 move, great move off open, and it was just beautiful sell. Okay. Now this is where I was talking about that this trade ended up working out down to the bottom, and it got to our final target, which is what I wanted, kind of here. Right, I wanted that to kind of sell a little bit more into there. All right. So that was a green trade. I did have to take a little small paper cut on it, but the NVIDIA trade worked out well. You can see here in the chat on the day trade signals that I like to give a full idea, my entry, my price that I got in, things of that nature. So here was how NVIDIA was looking kind of like a head and shoulders. I like that candle, how it sold off, formed a lower high. And I saw some wicks here underneath that 114, saw a little retest there. And that's when I entered this particular trade into the chat. Okay, I was already in, but this is when I truly enjoyed it. I liked it, where I felt like the community could really understand it and see that it was a possibility to work out now. Okay. I personally my trading style is to get into starters on contracts a little bit earlier once I see a signal, and then I add to my position the more and more I like the trade. Okay. So I don't signal or put anything into these chats until I feel like personally it is a solid trade that someone could take with a really good risk to reward if it's their first entry. Okay. So it's very beginner friendly. All right. Current trade I'm in, just managing stop loss above 115. I'm in a 112 put, 5.2 light size. My average was a little bit high. When I signaled it, averages were about $100 or $90 or so. And by the end of the day, they got to roughly 160. Okay. So that's 60 to 70 bucks per contract profit, right? In, you know, half a day. Good risk to reward. So I took it. Target is 110 ideally. So ended up showing how I was looking. I said, it's kind of holding strong. I need to see it. I'll let you know if I get out. I'm still holding it. All right. And then there you go. Congrats, all green. There's how the trade looked towards the end of the day, right? Almost got to our 110 target pretty much by close. All right. So there were some trade recaps for you. There's that 110, got to our 110 target. And here's that monster Lily trade. All right. This will be the last thing I share. And inside of our community, I have different sections. Okay. So you hear traders, if you're a beginner, talking about trading's gambling, how do you know? You don't know. If you've heard me before, I say that trading before earnings, that means entering a trade before earnings report, is a lotto. That means it can go either direction. However, there are strategic trades you can enter prior to earnings reports if it does give a good setup, i.e. risk to reward. The reward is so maximized that the small risk you take entering a trade before earnings is worth it. Okay, so I want to show you from the very beginning what I was looking at on Eli Lilly. Now, I do have a little bit of advantage here from my healthcare background, understanding the healthcare sector. So I signaled or put this in the chat here in a specific trade section that says lottos, okay? And I give my full rationale so everyone knows what it is. Eli Lilly giving me feelings of UNH. If you don't know what UNH looked like prior to its earnings, which I missed this one, right? It was into a lower high, pushing up. We knew that with the CEO killing, with the insurance, people backing out, not getting paid out, all that kind of stuff, just insurance, just not a good sight for Q1. Okay. So they were also overbought going into their earnings. They had a gap below and there was a trade. Absolutely just monstrous trades, bigger than the Eli Lilly one. And I was like, I cannot miss this again. Okay. So I want you to look. That's what I'm meaning by that. I gave the contracts 800 put, right? 5-2. They were roughly around $100 to maybe like $115 at the end of the day on Wednesday afternoon. Okay. 790 put, okay, on 5-2. And then I gave some that were a little bit further out that were around the same price. The 750 put was around that 100 to 115 bucks. 700 put was roughly around $70, $80. Okay. I got this double downgrade. Now, I don't always believe in news necessarily, but it was something to pay attention to. So I did my due diligence and I charted it out exactly to the T of how I would normally take this trade. And look at how it looked prior to their earnings. Okay. It's coming up into resistance, into the earnings. Do you see the RSI approaching a high point there? See that RSI last time? It got up close to 70, sold off. Getting up close to 70, right? Up into that resistance point. And what did I think was probably going to happen, especially with this gap down below? Okay, so this was prior to the movement. Okay, so I want you to take a look now of how it looks. I gave it again. Okay, I said, I think this could be a big move. I think 70 to 80 to $100 is worth it, right? To take the risk on that. That's what I'm saying. Not just throwing it in with no strategy, just because you're trading off of vibes and you like Amazon. Oh, Amazon calls into earnings. Why? Why? Right? So going to put my money where my mouth is. My average was 98. I did lower it. So I entered in some more contracts. My average was $85 per contract and I entered 4, okay, for transparency. I'm also eyeing some 516s. I wish I would have got into some of 516 contracts because I could have held longer for the full move. All right. You see there, it has hit 900. I added a little bit. Okay. Shout out Nico. And there's how I woke up to Lily. I was like, bet, plan working out to perfection. Okay. So I see the drop, right? And it was off of their guidance and slight miss, okay, based off of their weight loss drug, Zepbound, all right? So 840. So it dropped from 920 to 840 overnight. So we have a $60 drop already. I know that Lily, via my plan and the last time, Lily can move on earnings 80 to $100. So I already had my price target. I was like, man, this can get to 815, okay? Then I chart it and I look at it. I'm like, there it looks. All right, so I'm already looking at that 800 level where those previous lows are as my final target to take profit. All right, now I want you to look. I said, congrats, everybody. To the T, broke down and went even further underneath into roughly almost in the money for our contracts. It hit 793. James said, how those contracts move, right? And I gave the idea of where it moved to. So you see, I'm still in my full size here, right? Meaning I'm still in all my 4 contracts. That's where I said like it got up to about 200 to 220%. Okay. And that's where I trimmed 3 contracts. I said, hey, I got to take some profit off of here because they expire tomorrow. I cannot afford for this to retrace all the way back up. For some weird reason, it loses value. Okay. So then I'm holding one. All right. It was at 437% and I'm still holding. You can see the one right there, still holding. And there's where I finally take it. Got to take it and run. Okay. So with that being said, I wanted to end off there because I want to show anyone that's new about how you take a strategy from not just this, but just a trade strategy in general, from a full analysis that I give you here to an execution, to the game plan working out or not, and you assessing your risk, right? The reason I share percentages all the time, typically, and I tell even, my community members, clients, like they share their wins, right? But the percentages a lot of times is more important of you taking 20, 30% wins, 50% wins, 15% wins. Like you're getting the percentage, because flashing numbers a lot of times, which is important, how much money you may make, but everyone's journey is different, right? So shout out to David, caught, where is he? Right there. Caught NVIDIA. I think he caught it again as well. Down here. Yep. He's entering in. David knew nothing coming in. Okay. So shout out to David, took 2 contracts out, holding a runner, right? And he's risk off. Bought 3 contracts, sold 2. Now he can hold 1 extra contract. And even if that contract goes against him, he still wins the trade. Okay. In profit. So congrats to you, David. Congrats to everybody in here. Love it. Excited for everybody that's learning this. Amazing. And we're doing this together, right? It's not just me. I'd rather the people win and just me sit on the sideline and say, hey, I'm just stewarding this thing. All right. So thank y'all so much for the support. Going forward, if you want to join the community, if you want to get inside of here, get trade ideas, get lessons. I do teach while I'm live trading as well, right? You're more than welcome. If you want to get one-on-one support, there's that available to you. I know it's a longer video, but want to get you ready for the week. I'll see you on Sunday. See you next week. Talk to y'all soon. Peace, love, and blessings. Bye-bye.